There are more and more people waking up to the benefits of owning gold, and that includes nations. And in this case, they are reawakening both the nation itself and the people that live in that nation. We're going to talk about it and how it can have a dramatic impact on the gold market as a whole as we explore. Gold. It has been seen as a stable store of value for thousands of years. No question about that. But there are things that can stifle gold ownership. And we're going to talk about that in this piece here that is actually comes to us from the author who is actually directly involved as a representative director of the Japanese Bullion Market Association. In fact, the nation we're talking about is Japan. And it is quite intriguing. There is a lot of things that have prevented people from buying gold and transacting in it. And you can maybe guess on what one of those things are. But let's get right into the article here, because I think this is quite telling. And I'm going to talk about its impact on the overall global gold market here as we go through this as well. If you enjoy content like this, where I bring you news and also some commentary on the precious metals markets, including gold, as we see here today, hope you would consider subscribing to the channel and pressing that thumbs up button if you find value in what I provide here in terms of content. In the past, before China appeared on the world gold market, Japan actually stood as one of the largest gold importers globally. During the 80s and 90s, the author's primary role in physical gold trading at a trading house involved importing physical gold from Australia, Switzerland, London, South Africa, and other sources. However, the dynamics of the business gradually shifted after the introduction of a consumption tax. That's right. That's what stifled a lot of it, a lot of the investment into gold. And more dramatically, after the bursting of Japan's economic bubble after the 2000s, following which the country became a net exporter of the gold, marking a 180-degree turn in the business operations there at the Japan bullion market. During his 14-year tenure at a Tokyo bank branch, we imported gold only once, but exported it countless times, mainly to Asia, and when demand waned in Asia, to London. The consumption tax, initially introduced in 1989 at 3%, escalated to 5% in 1997, 8% by 2014, and then all the way up to 10% in 2019. What does this have to do with the gold investment? Well, when you purchase gold in Japan, you have to pay this tax, but you will get it back when you sell it, as the tax should be borne by the person who consumes it. In theory, this consumption tax should not have a negative effect on the gold investment. Instead, it has its advantages, as you can now receive 10% over the selling price, regardless of whether you paid 0, 3, 5, or 8, or 10% when you bought it. However, this consumption tax had significantly different impacts on the Japanese gold market. They did not fully comprehend its profound impact on the market until perhaps the early 2000s, in contrast to the tax treatment of gold in foreign countries such as Hong Kong, where there was no value-added tax on gold purchases. Bringing gold from Hong Kong to Japan without customs declaration and selling it here would allow you to add the consumption tax back on top of the price, now at 10%. A 10% profit on gold incentivized extensive smuggling by both individuals and large-scale criminal operations. You see what taxes do? You see how, it's crazy. And that's exactly what happened here. People find ways around it. Long liquidation of gold at the higher yen price and smuggling were the two primary reasons behind Japan's gold exports, despite having only one small gold mine that produces just several tons annually. The Japanese government eventually took strict measures to combat gold smuggling by customs and instructed businesses not to buy gold if they could not prove they had officially paid the consumption tax. although smuggling still persists to some extent. They assume the volume is now lower than it was in the past, and its influence on the Japanese gold market is diminishing. But now as gold is garnering more attention in Japan than ever before. In 1971, when U.S. President Nixon announced the detachment of the dollar from gold, closing the gold window, the gold price started to float from $35 per troy ounce 51 years after gold reached $2,000 per troy ounce, marking a staggering 57-fold increase in value against the U.S. dollar. Now it's at above $2,000 yet again. The trend reflects a natural process as governments of the world freely print the fiat money as they see fit, while gold supply is limited. And that is really the biggest thing we can take here. By and large, the same thing can be said about gold in Japanese yen. However, gold in yen broke its historic high 2 years ago after U.S. gold did. The year yen gold has broken its historic high multiple times, with the latest price reaching well over 9,600 yen per gram. In 1971, gold in yen started around 250 yen per gram. So yen gold has appreciated approximately 38 times over. And I want to pause right there and remind you that in other currencies, gold has been well into all-time highs for quite a long time. I've actually documented this. Every Sunday night, I do a market watch, and from time to time, when we check the markets as they open up in Asia, we'll look at the price of gold and silver and other currencies as they're listed there. And yeah, it's crazy how high it is. And people talk about it in U.S. dollars. And yeah, in U.S. dollars, it may be slow to go because the dollar is the strongest of the currencies out there by far. And so therefore, it's going to, it's going to be suffering, especially with what the Fed does with raising rates as they have and keeping them high. But of course, now as I record this video, there is, real concern or hope, I guess, depending on how you look at it, what your perspective is that the Federal Reserve will lower rates, and that means that the dollar will weaken. And we very well could see that, and gold will continue to climb up. I think that coupled with central bank buying and what we're talking about here could mean a seismic shift, not only for Japan, but also for gold's price in the general market. The article continues. In the past, they've observed significant selling of gold bars and jewelry whenever the price jumped by 500 yen per gram. There were long queues of sellers at the major retail shops. The reverse held true when market declined, with people lined up to buy gold. When the author started trading at Tokam, at a trading house many years ago, his simple yet consistently profitable trading strategy depended on a Japanese investor's tendency to hunt for bargains, as opposed to the Western investor's trend following style. When London and New York sold gold, causing prices to drop, Japanese investors entered the market to snatch up the bargains, and vice versa when investors in the West bought and prices rose. And they do have a chart that shows you that even now today, you're seeing a lot of gold being sold as the prices are high. But at the very end, here we are running towards the end of 2023, there's been a notable uptick in gold imports. It says this bargain hunting style of Japanese investors has been rapidly changing in recent years, even with the price of gold in yen has reached levels we never saw in the past. That is something that's breaking the trend there and causing this seismic shift in the Japanese market. One might naturally expect a surge in selling from gold holders, but that is not happening. Not happening at all with this sharply higher price level. Stronger prices had always attracted sellers at major retail shops, but nowadays they report the sales and purchases are well balanced at their counters, in spite of these high prices. In the realm of gold ETFs, holdings in the U.S. and Europe have been decreasing, but in stark contrast, Japanese gold ETFs is continuously increasing its holdings despite historically higher prices. Now, I don't know what their ratio to paper contracts to actual physical holdings are in the Japanese gold ETF market. But even if it's just an exposure to the price, and there's a lot more derivatives out there, that's what's pushing the price up. Manipulation to the upside, I guess you would say, by the natural market of folks buying. Now, there's a couple of reasons for this new attitude towards gold, the author here says, and by the way, his name is Bruce Ikemizu, who is this representative director from the Japan Bullion Market Association. And again, there's these two reasons. Number one is the generational shift of investors. Older generations were the primary buyers of gold in the 80s and 90s, and even until a few years ago. However, now the older generation is exiting the scene, selling their gold, while a younger generation is entering the market. A decade ago, more than 90% of attendees at the investment seminar that the author held were older men and women. Especially after COVID, a much younger demographic, both men and women in their 20s and 30s, has become the majority. These younger investors have not witnessed a market where gold was priced around 1,000 yen per gram. Past price levels, which might have deterred older investors from investing at the current gold price, hold little meaning to the younger generation. So it's a generational shift of thinking there in the Japanese market. That is intriguing and quite telling, I would say, to see that kind of move. The second one is continual yen depreciation. The Japanese yen began at 131 yen to the dollar, and has since depreciated to 150 yen per dollar. The yen has devalued by approximately 8.7% against the US dollar. Combined with inflationary pressures, Japanese investors are increasingly concerned about holding yen in their bank accounts. Sound familiar? This is what we've been talking about on this channel for a long time. Watch how this trend unfolds, because they're saying the yen is not the currency. It's not as stable as the dollar, and it's certainly not as stable as gold, that's for sure. With the safety of bank deposits has traditionally been the preference of older generations, just holding bank deposits is no longer a safeguard against the depreciating value of the yen. More investors are now viewing gold as a hedge against inflation, and yen depreciation investment in gold continues to rise despite higher prices. This new investment purpose effectively explains the trend of Japanese gold buying despite the historic high price. This is the case, and we see this happen all too often here in the United States. We have a much more stable currency, and even as such, that's how psychology is. People tend to buy when the price rises, and that's just natural. But there's a real reason why they're doing it, because of the fear of the stability of their currency. Pretty amazing, and I think that's quite telling indeed. And now there is this introduction of a new NISA account, which is a Nippon Investment Savings Account, introduced in 2014 following the English version. Individuals who use NISA are exempt from paying the 20 to 0.315% tax on trading profits. This account, which was limited to 1.2 million yen and a duration of 5 years, is set to end at the close of the year. The new NISA, which starts in 2024, will allow individuals to invest up to 18 million yen each with no time limit. This reflects the government's initiative to move funds from dormant bank deposits into investments. Many people have refrained from opening NISA accounts in the past, considering the limit too small and negligible. And however, the new 18 million yen limit with no time constraints changes the landscape entirely. More and more investors are now opening current NISA accounts, as they have both the 1.2 and the new 18 million, prepping for the expanded framework starting at the beginning of 2024. In January 4th, to be exact, the new NISA will include 4 gold, 3 platinum, and 2 silver, 1 palladium, and 1 precious metal basket funds. In addition to physical gold products, they can naturally expect more investment funds to flow into precious metals from Japanese investors. So this gives them another option there. I think it's pretty amazing to see this kind of activity and this kind of action occur in the Japanese market. And let me know what your thoughts are. I thought that was a very interesting piece. And if enough people latch onto this, that's more people buying gold. That means there's more demand, and Japan is a very densely populated country. No question about it. There's a lot of people there, and we know what the feeling is about gold in the East in general, and it's been stifled in Japan. But no more. There's no talk about that tax going away either, and they're still investing. The shift is occurring, and it could have a dramatic impact, I think, on the overall market, which means another case for higher gold prices in 2024. Let me know what your thoughts are in the comments section down below. Hope you found this video informative, insightful, and educational. I would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.